Phil, I was speaking to a venture capitalist this week who said the IPO window is frozen shut. Would you agree?
It's frozen shut. It's closed. It's double locked. It's nothing's happening for a while.
So what next?
So I think we're in this period of uncertainty about inflation and its impact on companies. You've got tech stocks that are down to almost pre-pandemic levels of pricing, right? Kind of like good yardsticks of the market, like Zoom, DocuSign, Peloton. And you've got geopolitical risk out there. And until those things are have a bit more resolution, I think you're going to see a lot of companies thinking about raising a new round of funding, or something that we're starting to see now, which is starting to kind of control their cash through layoffs or reprojecting some of their growth.
So GoPuff, for example, is reportedly cutting a lot of jobs. And also, Bloomberg is reporting they're raising $1 billion in new funding with no IPO in sight. They'd originally raised at a $15 billion valuation. Not sure if that valuation will hold up. But what do you imagine is going on behind the scenes at a company like GoPuff right now?
Some very stressful board meetings for sure. I think you're going to see some valuations come down. One of the scary things is that a lot of companies raised a lot of private capital in 2021 at really high valuations. And now they're probably effectively underwater and are a little behind on growth strategies and growth projections. And so I think the real big next wave is going to be kind of this day of reckoning where companies admit it, start layoffs, have to raise money, but probably at terms that they're not really excited about. And you're going to hear the D word in Silicon Valley, which is the down round. And we're going to start to see more of those kind of come out. And we're just, it's really, if you want to be the first to kind of tear the Band-Aid off, or if you kind of want to wait and hope that things are going to get better. But, I like to say hope is not a strategy.
We saw Instacart sort of tear off the Band-Aid, lowering their own valuation from $39 to $24 billion voluntarily. They're not in the process of raising money, at least not right now. You're saying mass layoffs, a mass number of down rounds. Are we going to see companies go under, get acquired?
I think a combination of all three. I thought what Instacart did was a really gutsy move, really, to kind of come out first and say, look, there's a benefit to actually repricing ourselves at $24 billion. We can now issue stock to our employees at a more fair value. If our competitors like DoorDash are down a lot, I think other companies are going to do so. You're probably going to see some consolidation. And I think you're going to start to see a paradigm shift where instead of it being a very founder-friendly market to raise capital, it's going to shift to the VCs and to the growth equity investors. They're going to get better terms. They're going to get better valuations. And we're going to start to see that happen. One of the interesting things at EquityZen is because of kind of where we sit, we can actually see secondary transactions that are happening in between the last funding round, right? Because we usually don't see prices happen for a year or two at a time. And we're definitely seeing kind of pricing compression versus just a quarter ago.
What does it mean for employees in the middle of the Great Resignation, when a lot of people have been thinking about, do I really want to keep doing what I'm doing?
Yeah, absolutely. Well, the first thing is a lot of these employees were really excited and anticipating some type of liquidity for their shares by way of some type of IPO or maybe a SPAC. And maybe if they'd started thinking about life events. So when you compound the fact that the markets are down, you're not getting liquidity, goods are costing more, a lot of companies are starting to proactively kind of reach out to places like ourselves and start to think about liquidity for their employees in the private markets, right? And so fortunately, that's kind of a part of the capital market structure that's grown a lot in the last 7 or 8 years. So we expect to keep seeing that happen.
Now, your rival Forge, I believe, just did a SPAC. Is EquityZen going to IPO eventually, though maybe not in the near down market future?
Yeah, well, window's very closed right now, but we started EquityZen to bring private markets to the public, right? And that's our mission. And we've been fortunately been able to grow. And as a private company, haven't been inhibited by how we can deliver that to our customers. But as my co-founder and I, one of our responsibilities is to kind of evaluate all options. And if there's an opportunity to significantly grow the business and kind of further that mission, we'll keep our door open for that.